In this video, I want to look at the impact of global events, on currency markets and stock investments. How do global events affect currency markets as well as traditional stock investments? Global events, such as political upheaval, economic crisis, natural disasters, or pandemic, or even wars, can have a significant impacts on both currency markets and stock investments. These events create uncertainty, which can lead to, volatility and influence investor behavior. They tend to influence how investors invest. So here are examples of how currency actually global events affect currencies as well as the stock markets. Number one is political events and geopolitical tensions. Political events and geopolitical tensions. So we consider currency markets. So political instability or uncertainty, such as elections, such as trade wars or military conflicts, can cause fluctuation in a country's currency value. For example, during a period of political crisis, investors may seek safer currencies like the US dollars or the Swiss francs or the British pounds and other related safer currencies, driving up their values, while weakening riskier currencies. When it comes to trading, usually the entire process is based on the principle of demand and supply. As investors pour into more stable currencies, and they flee less stable ones. The more stable ones become, kind of overvalued, and the less stable ones become kind of undervalued. We also consider stock investment. Geopolitical tensions can lead to market volatility, especially for companies exposed to affected regions or industries. You discover that regions affected by this tension would equally have an impact on stock markets in those areas. So trade tariffs, sanctions or military conflicts can disrupt supply chains, reducing earnings and creating uncertainty, which can negatively impact stock prices. So on the other hand, companies in defense, security or commodity sectors may see an uptick in stock prices. Whenever there's war, defense contractors and companies in the defense sectors tend to have, a boost in their stock prices. That's how the market works. The investors will buy in with expectation that there will be defense spending and all those things. Number two is economic events and data releases. Economic events and data releases. We want to consider currency markets. So in case of currency markets here, economic reports such as GDP growth, that's growth domestic product, unemployment data, inflation, or interest rate decisions have a direct impact on currency value. So strong economic data or higher interest rates, often strengthen a currency, while weak economic data, or low rates can weaken the value of a given currency. We also want to look at stock markets. In this case, economic events such as like unemployment, like negative GDP growth and all those related factors, can affect the stock market negatively, because companies tend to depend one way or the other on those factors. Actually, in the case where you have the employment rates, whenever employment rate is high, you discover there will be more spending in the economy. That will boost stock prices. And so in a case where there's lower unemployment, you discover that the market will then suffer accordingly. And so positive economic data, just such as robust, GDP growth or lower unemployment can boost investor confidence and drive stock prices higher, as I earlier explained. And so poor economic indicators or recession can equally lead to lower stock prices, especially for cyclical sectors like retail, travel, and consumer goods. Number two is a natural disaster and environmental events. Natural disaster and environmental events. How do these factors affect the currency markets? Natural disasters such as an earthquake, hurricanes, or floods can disrupt economic activities and affect currency values. For example, major disasters that impact a key industry or a key industry in a country may weaken its currency due to decreased economic output. Whenever there's a decrease in production in goods and services, definitely going to affect the currency of the company or the country involved. Let's look at how it affects the stock market. The stock market can experience significant volatility, following natural disasters. Companies directly affected or impacted or influenced by disasters companies like insurance, utilities, or agriculture. Companies in those sectors may see stock prices fall, while others, like those in the building or in the rebuilding or the construction sector, might benefit from this particular misfortune. So broader market sentiment can also affect can equally be affected, leading to a market-wide decline, kind of. So whether you like it or not, human beings, most of the times act sentimentally when it comes to the markets. That's why behavioral finance is something you must learn to study and be conversant with. Please like this video and subscribe to this channel. Number 4 is pandemic and health crisis. Pandemics and health crisis. We just experienced one, some years back. So how does it really affect, currency market? Pandemics like the COVID-19 crisis leads to, a global uncertainty, which can drive, investors towards safe haven, currencies like the US dollars or gold. In contrast, currencies, heavily affected by the pandemics may experience, a depreciation in their currency due to economic disruption or government response like lockdowns and stimulus measures. We are all, witnesses of what really happened during the COVID-19 era. It affected both the market and even, currencies. So how does it really affect the stock markets? So health crisis can severely affect stock markets, especially in sectors such as travel, hospitality and retail. Discover that many airlines, they just, shut up. No flights again, and so the airline industry was particularly affected. Hospitality actually was an area that was really highly affected by the COVID pandemic. Restaurants shut down, and all the hotels could no longer function because people were no longer traveling. And so, however, sectors like healthcare, technology, and remote work and pharmaceuticals, may see a surge in stock prices. We discovered that even Amazon, online retailers were still selling, companies like Zoom, people were still meeting online. There was a surge in their stock prices. And so investors, often shift their portfolio to protect themselves against the widespread economic impact, leading to more volatility. As people sell off their holdings to hedge against the environment, to hedge against the market environment, you discover that volatility tends to increase in the markets. Number 5 is central bank actions and monetary policy. Central bank actions as well as a monetary policy. How does these actions affect the currency markets? Central bank decisions on interest rates, quantitative easing, that's the QE, programs, or monetary stimulus significantly, impact currency values. For instance, a rate hike can make a currency more attractive to investors, strengthening its value, while a rate cut can weaken a company's currency. Similarly, expansive monetary policies, do lead to quantitative easings, and it can like policies like the QE. We had QE1, QE2, and I think even QE3 in the US. So those kind of policies can lead to it can devalue a country's currency. And how does it really affect the stock markets? So when it comes to the stock market, central bank action directly affects stock prices, as some lower interest rates can lead to higher stock prices by making borrowing cheaper and encouraging spending, and investment. The more people spend and invest, the more it stimulates the stock market to grow. You know, and not only that, conversely, rising rates can combat inflation, and which can depress stock prices, particularly for growth stocks that rely on cheap capital. As whenever there's a rising rate, it tends to affect to combat inflation, somewhat, because of the lower amount of money in circulation. And number 6 is global financial crisis. Global financial crisis. How does it affect the currency markets? So during a global financial crisis, currencies often experience sharp fluctuation, and so safe haven currencies tend to appreciate, while those from emerging economy, from unstable economy, will typically experience depreciation. And for example, during the 2008 financial crisis, the global financial crisis, then discovered that the US dollars and the Swiss francs, strengthened as investors sought securities in them. And then how does it really affect the stock market? Global financial crisis like the 2008 crisis, stock market crash, and the 2008 housing bubble, global housing bubble, or the COVID-19 market turmoil, led to sharp decline in stock prices. Bank stocks and financial institutions often bear the brunt of the damage, while some actors, or some sectors like utilities and consumer staples may be more resilient. Investors typically, react to the uncertainty by fleeing to safer assets. They will just dump their stocks, sell their shares, and take their leaves. And so not only that, global threats, events, and supply chains, disruption can equally have a negative impact on the currency as well as on the stock market.